Hello, and welcome to the Corporate Storytime podcast series. My name is Lucas Robinson, the host of the podcast. On this pod, I'll get the opportunity to talk to ASX company leaders and innovators as they run through their personal executive journeys and the stories behind the companies they are helping to grow today. I'll be leveraging my experience as a former stockbroker and my current role with investor relations consultancy, Corporate Storytime. But enough of that. For now, let's gather round, come in close, and let me tell you a story. Welcome back to the Corporate Storytime podcast. OD6 Metals Limited is an ASX-listed company focused on the development of the Splinter Rock rare earths project in the Esperance region of Western Australia. The rare earths mineralisation at Splinter Rock and at the nearby Grass Patch project lie in shallow hosted clay basins. A recently updated mineral resource estimate for Splinter Rock has confirmed the project as by far the largest and highest grade of several clay-hosted rare earth deposits in Australia. While some of the ASX's Brazilian-based clay-hosted rare earths projects have received substantial investor attention, OD6 Metals currently represents a value opportunity with substantial upside potential. OD6 Managing Director Brett Hazelden is a metallurgist who has led OD6 since the company's IPO in June 2022. Thanks for joining me for a chat, Brett. Maybe we can start with an introduction to the rare earths market. Where is the demand coming from for these metals and why are you upbeat on the sector?
So the rare earth market's quite a little complex little market there. There's 15 different elements that make up rare earths, but mainly there's four main rare earth elements of consideration. So praseodymium, neodymium, dysprosium and terbium. They're all the magnet rare earth compounds or elements, I should say. And those elements are going into the things like wind turbines, electric vehicles, semiconductors, phones. They're even going into nuclear reactors, which is topical of late, and also into everyone's air conditioners and everything else. So wherever energy efficiency is being driven and decarbonisation is being driven, rare earths have a part to play in that whole decarbonisation side of things. So it's a growing industry. The industry itself is dominated by China. There's only one producer in Australia, which is Lynas. There's one producer in America, which is Mountain Pass or MP Minerals. And there's not too many others around the world outside of China. So large demand, growing. Most of the downstream is in China itself, but the Chinese themselves actually need more mines outside of China to meet the demand that's forecast to grow by about 80% by 2035. So that's about a 7.1% CAGR rate, and it's about 10 to 20 new mines needed. So it's a big growing sector and plenty of demand there.
Yeah, so there's room for Splinter Rock and plenty of other projects to come online over the course of the next 10 years or so. So you mentioned Lynas. They've obviously been a pretty big success story. How is the deposit that you've got at Splinter Rock different to what they're doing at Mount Weld and their downstream business as well?
Yeah, so Lynas is a bit of a unicorn out there. It's a hard rock deposit, where ours is a clay or soft rock deposit. So they've got really, really high grade. They've done the tough yards over the last sort of 2 decades with big support coming in from Japan to keep a supply outside of China growing and actually going. So they've had good success there. They're continuing to reinvest into those projects. So look, that's a good project. When we come to clay-hosted resources, they're generally found in places like China, Myanmar and others. They generally have a higher heavy rare earth content compared to Lynas that has more of the light rare earths. And the heavy rare earths are the dysprosium and the terbium and a number of others as well. So they get a bit of a premium price there, and that's why people look for the clay-hosted rare earths. That said, our grade is a bit like a low-grade gold mine compared to a high-grade ounce dirt underground gold mine is probably the best way to compare the two projects. So we're bulk mining, bulk tons, and pulling out a really good mix of heavies and lights throughout that whole process.
And just back to the market for rare earths, where are prices at the moment and how sustainable are the prices that we're sort of seeing prevailing currently?
Yeah, so the prices had a bit of a roller coaster ride over the last couple of years. They've definitely come up from base levels, which are about $40 to $50 a kilo NdPr. So most people talk NdPr as the base comparison number for rare earths, which is just neodymium and praseodymium. So the prices have spiked up to well over $120 to $180 a kilo for that. And then they've slowly pulled back as time's gone by over the last 2 years. And they're sitting about $50 a kilo at the moment, which is quite low. There's been an interesting public debate about is that sustainable, especially between Lynas and Iluka. Iluka's pointing out that Lynas isn't making any money, Mount Pass isn't making any money, and none of the Chinese are making any money at these levels. So we probably wouldn't be making money like everyone else at this stage. So I don't think we'll be any different. So is it sustainable at the current levels? No. Are the forecasts of somewhere between $120 and $200 a kilo sustainable or optimistic? I think they're very optimistic. I think where we're going to sit in the long term is somewhere between $75 and $95 a kilo there, which is, in my discussions with various off-takers and downstream processors, that's where most people think everyone makes a bit of money. No one's making too much money. There's enough incentive to build a project. But equally, we're not seeing projects come online that, whilst they might be government funded, like some of the ones in Australia, Africa and the US being proposed, they need to be in that lowest quartile, lowest half of cost producers. So really, we don't want to see a whole heap of projects get up and running and then go under because it's going to be bad for the industry.
But one thing's for sure, I suppose, if the majority of the producers globally are unable to make money at the prevailing price, it can't remain at those low levels for long. So, one would think that we're pretty close to sort of a bottoming in the cycle. We mentioned in the intro the Brazilian players and the fact that they've received some pretty good attention from investors. How does what you're doing at Splinter Rock compare to some of the better known stories out of the Brazilian scene, such as Meteoric?
Yeah, so the Brazilians really only came on board in the last 12 to 18 months. So there's Meteoric was sort of one of the leaders in that. They've gone into South America, managed to pick up some really good tenements with some good grades on there. They've had to pay for those in terms of both the money up front and ongoing, plus also ongoing royalties are saying somewhere between 3 to 5% of their net revenue. So pretty expensive to get in there. And a lot of people have had to follow that same model now. So when we look at their grades are sitting about 2,500 to 2,700 ppm total rare earth oxide, or TRIO, which is really good grade. We sit around that 1,300 is our average. Our inside centre project sits about 1,600, which has got about 119 million tonnes, or a 20-year mine life on first guess in that area as well. So on comparison, they've got a little bit higher grade, but we're also similar size. That said, a lot of the other ones in Brazil, so Brazilian Rare Earths, Serra Verde, Brazilian Critical Minerals, a couple of ones out of Africa and China, they're all sitting around that 1,500 ppm or less, so somewhere between 1,000 and 1,500 ppm. So we really sit in the same class as most of the Brazilian Rare Earths, and Meteoric's a little bit of an exception there with their grade. So we haven't seen anyone else really come up with something similar yet.
Yeah, that's a good overview. So why don't we get into Splinter Rock? It wasn't very long ago that the company brought out an updated mineral resource estimate. Can you run us through that and how it compares to the other players within the Australian clay-hosted scene?
Yeah, so Splinter Rock, we were listed literally 2 years ago now, so June last, 2 years ago. So we've busily put out a first resource last year, and now we've doubled that to 682 million tonnes this year, last month. And that's at 1,338 parts per million TRIO. As I mentioned, inside centre, it's about 120 million tonnes at just over 1,600 parts per million TRIO. And that sort of sets ourselves apart from virtually any other Australian listed company that's got a resource out there to date. Most people are sitting sub 1,000, a couple or just over 1,000 ppm, but also the resources are sub 200 parts per million. So we sort of take a view, and we've used a cut-off grade of 1,000 parts per million. And there's only two of us in the sector doing it at the moment. That's ourselves and Meteoric. A lot of other people are using lower cut-off grades. And if we used a lower cut-off grade, we'd have well over 1 billion tonnes at 1,000 parts per million if we wanted to go that way. But the reality is we need the best of the best areas to pay for, obviously, the operating costs, the capital costs, and a number of other factors in there as well. So hence we're just focusing on the best areas to start with.
Well, that makes sense. I mean, you mentioned earlier that the 119 million tonnes at Inside Centre may represent up to 20 years mine life, so it seems unnecessary to build a resource up to 1 billion tonnes at this point when you've got more than enough on your plate and that you've identified already. I suppose we can talk about the location a little bit as well before we get into some of the other sort of technical processing questions. We said in the intro you're near the port of Esperance. How do you describe the area where you're situated at Splinter Rock?
So Esperance itself is a big town, so it's a multi-commodity town. It's got farmers down there, a big farming community and really good farms down there. The Splinter Rock project itself doesn't sit on any farmland, so we don't have any of those interactions or issues interacting with the farmers on their own properties. So we sit away from that farmland. We're about 100 to 150 kilometres away from the port itself. The port is one of the southern ports of Australia, the biggest and deepest ports going at the moment. And Esperance itself handles over 200 ships per annum, up to Cape-sized vessels, which is for shipping iron ore. And there's also a regular container shipping line that's running in and out of there as well. Us going forward, we'll be using sea containers to ship out about 5,000 to 10,000 tonnes per annum of mixed rare earth carbonate, which is the final product. So that's easily done out of that port. There's these existing roads. The sealed roads are virtually all the way out to the mine itself, with the exception of about the last 20 to 30 kilometres. And I suppose the other key factor of Esperance is they've been running wind and solar down there for a long, long time. So they've recently upgraded their wind resources for the town. They've got 2 new 4.5 megawatt wind turbines and a 4.5 meg solar farm as well, which is then backed up with gas turbines. So they're getting about a 70% penetration rate on use of renewables, which is really something we're looking at as a company going forward, to install those renewables from day one, and then also have a backup, whether that's gas, hydrogen, diesel. We'll see what happens in the coming years as the energy mix changes.
Yeah, I mean, having the renewables as part of the story really improves the potential for funding and the desirability of the investment at a lot of different levels. Why don't we talk about the processing? How do you recover the rare earths from the clay-hosted ore material?
So clay rare earths have been mined around the world for a long time. It's been done in China for a long time as well. They use probably less ESG tick-in-the-box methods. Generally what's happened is they've done in-situ leaches on the sides of mountains that have been recently weathered. So effectively they're putting an acid and some ammonium nitrate onto that and then collecting it at the bottom of the hills once they've recovered the rare earths out of that. So that's not the way we're looking at processing it. We're looking at probably a bit more of a conventional mine, which is effectively it's a free dig. It's a clay, so it's fairly easy to mine. We've got a low stripping ratio. So free dig it, chuck it into a set of leach vats, very similar to what you see in gold is the best comparisons I always work on. So if you imagine a gold carbon in leach or CIP/CIL process, similar story. So we take the clay, we put it into those leach vats, we stir it around. We're adding a hydrochloric acid. There's another method where you can add sulfuric acid with ammonium sulfate. So we're going the hydrochloric acid route. We'll put it in there for somewhere between 6 to 12 hours. You'll see gold mines, they used to do about 24 hours for a gold mine. So there's nothing new and technology-wise that's sort of really out there. This is pretty well done in Western Australia for a long time. The key, once we've done the leaching, is once we've got it into the solution, the rare earths, we then need to separate the solids and the liquids. So we do that through a filter press, filter out all the liquids. The liquids will then also hold a few impurities, which is aluminium, iron, and a number of other items, and we will then remove those impurities. And the way the impurities work is you start off at a relatively low pH of 1 for us, and as we increase it up to 3.5 to 4, that pH, we see the impurities progressively drop out through that process. And then we continue to increase the the pH up to about 6.5, 7 at the end of the day, and that's when we start precipitating out the rare earths and get a mixed rare earth carbonate. So that's the process. It's a fairly straightforward process. It's not complex. As I say, we're equivalent to a bit like a CIP, CIL gold mine, which is seen in Australia for a long, long time. There is another step that we can go. So once we've got that mixed rare earth carbonate, you can go down and separate out each individual rare earth oxide if you wanted to. But at this stage, we'll probably just have stage one as the mixed rare earth carbonate. And we are looking to do some work with ANSTO where we'll look at potentially just separating out a single rare earth oxide being what they call a diadynium, which is an NdPr, so as a single rare earth oxide, and then that's saleable to the magnet makers. So we're just working through all that detail. That's all part of the scoping study that's due to be completed at the end of the year. And there's probably one important part in this whole thing as well. So reagents, power, they're key drivers of these processes. And what we've decided to do is we've looked at sulfuric acid versus hydrochloric acid. Typically, sulfuric acid comes from a lot of the nickel mines. So the nickel mine shutting down, that sulfuric acid is not as readily available, and you'll be shipping around a lot of water. So what we've decided to do is implement a chloroalkali process, which is effectively taking table salt, adding some power plus the water, put it into an electrolyzer, and you split out an acid and a base. In this case, it's hydrochloric acid and sodium hydroxide. So the hydrochloric acid does the leaching for us, and then the sodium hydroxide actually increases the pH back to neutral and then helps us purify and precipitate out the rare earth carbonate. So instead of having to ship multiple different reagents around WA in a liquid form at a high cost, really all we're doing is bringing in sodium chloride from up north, from Onslow or Karratha, Port Hedland, lots of salt mines up there. We'll bring about 50 to 80,000 tonnes of salt down every year, easy to transport, very benign, and then produce our 2 reagents there. So it's a pretty simple process for us, and long term, especially with renewable energy in there, we think that's the way to secure your supply of reagents and have the lowest cost of production.
I suppose going back to the infrastructure that's available in the region, it's not just to get the product to market, it's also to get some of those inputs efficiently delivered to the site as well. Particularly, as you say, the salt that could be coming from a different part of the state and arriving at the Esperance port. So my understanding is the recovery rates are really key. You've obviously described there you've got low mining costs, it's shallow and soft ore. So how are you feeling about the recovery rates in the test work that you've done? You mentioned that there has been some work done with ANSTO and also where work with CSIRO. How's that looking, and do you feel like you're de-risking that part of the business?
So recovery rates in general for rare earths in the clay-hosted space are generally not 90% or anything else. You'd never actually see that. So the recovery rates generally across the clay-hosted spectrum is somewhere between 40 to 60, 70% at max recovery. So what's generally happened is you've had a granite system that's been weathered out. The granites hold a mixture of what we'll call refractory ores, monazites that aren't easily recoverable through a leaching process without having to crack it at 600 degrees and do a whole heap of high temperature work to it. So every clay-hosted rare earth show around the world, including meteoric and Brazilian critical minerals at Clara, they've all got that refractory fraction that's in there. Then what we look at is there's 2 other portions. There's the ionic portion and then there's the acid-soluble portions, and that's what we're targeting to get out. So we're achieving about 60% recoveries. A lot of the Brazilians are achieving somewhere between 46 and 68% recovery. So very comparable to what we're achieving. Again, slightly different mix of reagents being used, us just hydrochloric acid to leach it and then sodium hydroxide to remove it. The Brazilians will be looking at a sulfuric acid with ammonium sulfate, and also then to neutralise it, they'll be looking at bringing a lime or bicarbonate or something else to produce the final product and remove the impurities. So, look, we're on par with everyone else that I've seen around the world, doing it slightly differently, but similar operational steps, slightly different reagents, same recoveries. It is a key one that people need to be looking at, that the recovery drives a lot of value there. The lower the recovery, the lower your revenue. The higher the recovery, obviously the higher the metal recovery, but also you can pay for more reagents and everything else. So there's a lot of that gets lost in translation between rare earth players in the market. Some people are stating they've got 800 ppm trio. They just can't afford to pay for the reagents to increase the recoveries, whereas us sitting at that 1600 ppm at inside centre, we've got plenty of room to move in terms of chasing the recovery a bit harder, using a bit more reagents, and then getting a better product and revenue margin overall.
So it seems to me, unlike a lot of other mining projects, you don't need to just look at the grade, but you need to look at the grade times the recovery rates to get a proper indication of exactly what you can sell at the end of the day.
That's correct. Plus, you've also got to look at the size of the resource. So if you're treating 5 million tonnes per annum plus, you need to have a resource over 20 years. That's a minimum of 100 million tonnes that will be in reserve effectively. And generally you work on a 2-to-1 resource to reserve conversion as a minimum in most mining industries. So you sort of need a big resource and an easy resource to get to. You see a lot of resources sitting with just 2 to 3 metres thick, and you're disturbing a lot of area to get 5 million tonnes per annum. So we're sitting with inside centre between 20 and 70 metres thick there, which means quite a small footprint, a bit bigger and deeper pit, but the pit itself is really consistent. Low stripping ratios. We've got about a 10 to 20 metre coverage sitting on top of it, so really easy to get into. And then once you're into it, it's virtually no stripping ratio at all after that. So there's some of the drivers that people need to be looking at, along with reagent usage, but also the cost of reagents. So there's a lot of reagent usage data that's not out in the market from Brazil, South America and others. We do put the data out there, and we'll continue to put it out there, so there's some transparency about what's happening.
Yeah, I suppose, what you talk about there, a lower disturbance, sort of a smaller disturbance area really does make a big difference when it comes to the permitting of an operation. So the fact that you've got up to sort of 70 or 80 metres in depth at inside centre obviously means that, the surface area that you're disturbing is a lot less.
Probably worth mentioning just on the permitting while we're there. So small footprint, which is good. We don't sit in any conservation parks or national parks. You're seeing a lot of the Brazilians that are either in it or just around it. So we don't have those issues. We've been doing all our traditional owner surveys out there. So from an ethnographic point of view, so a Dreamtime point of view, we know we're clear on that front. And with all the archaeological surveys that we've done to date, we haven't found anything. So we're really positive on where that's heading with from an approval point of view from the traditional owners. And then from a flora fauna point of view, we've done our first season's work on a spring season. You've got to do spring seasons for these things to be approved nowadays, so that you can see what flowers are out there, etc. So we haven't seen anything that we think's a showstopper or anything else. What we have found, the 1 or 2 things that we have found, we found multiple of them in multiple different areas, which is really good as well. So you always find something in these mining gigs, and you always have to deal with them. But to date, we're really happy with where we're at, and we'll be back out there in spring again doing a really big survey around inside centre.
Jolly good. Well, talking about work that's ahead of you, you said the scoping study on Splinter Rock is going to be due in the second half of this calendar year. What work has to be done between now and then in terms of the delivery of the scoping study?
So the first key step was getting an indicated resource, which we've got now. So there's 119 million tonnes. That then allows us to put out effectively all the financials that will come along with the scoping study. You can't put it out on inferred only resources. It's got to be majority, if not all of it, in indicated resources. So that's the first big important step. The next step is all the ANSTO data that we're working through at the moment. So we know inside centre and also an area and prop that we're looking at is our 2 key focus areas. We've got 3 stages of work that's already been completed from a metallurgical point of view done at ANSTO. The 4th stage is currently currently underway at the moment, which is taking all that leaching data that we've done, going one step further to optimise it. The next step to actually look at the impurity removal steps and how best to achieve that in the most economic way. And then we'll have a mixed rare earth carbonate that we'll actually produce in the next 3 to 4 months as well, which will be key just to say, look, we can produce it, we can do it economically, and that all feeds into the scoping study. The scoping study also goes through a whole heap of another 13 or 14 different sections in terms of community, operations, etc., that run through there. So that all gets pulled together, and that's what we're looking to have in place by the end of the year.
Good. Well, before we wrap things up, do you want to run through the team that you've got at the company, I suppose with specific emphasis on your own background?
Yeah, so my background, I'm a metallurgist. So once upon a time, I started in the gold sector at Sons of Gwalia, of all places, in Leonora and Laverton. So that was my first gig out of uni. I've then done diamonds at Argyle Diamonds in the operations sphere as well. So I've had a really good operations feel. I then moved across to a company called Fleur, which is a big American constructor. I was involved in Boddington, Oxiana, Prominent Hill, and also a few other Newcrest projects, which is where Newcrest then took me back into the client side to do Gozawong, which is a big high-grade project that's it's been operating for a long time. That's in Indonesia. So I then moved into the junior sectors through iron ore, etc. Cut my teeth on that as project directors, running through those and studies. And then I've gone into and was a founder of a company called Callium Lakes. And we took that through from exploration through to all the various study phases, fully financed with both Australian and German money coming into that, and obviously raised the money along the way. So I've got a unique background in that I've actually been through operations, construction, all the study phases, and actually been through and financed a project, including debt and equity. So that's my main background there.
That'll come in handy for OD6.
Yeah, so look, I think part of the reason why they wanted to get myself on board, just because I've got a few battle scars through that whole process, as you do over the years. So I've sort of learned a few things of what not to do, but also a lot of things how to do it right as well going forward. We've also got a couple of really good directors on board as well. So Dr. Darren Holden was one of the founders, geologist background. He's found a lot of different projects in Australia over the years, and is a key, obviously, to getting the geometallurgical understanding to where we are today. We've got Piers Lewis from a finance background and works for small cap corporate, so he's really good from that technical, from the financing background as well. And importantly, we've got Mitch Lone. So Mitch Lone's Alcoa's strategic directors there, comes up with a lot of the plans. He's also got a metallurgical background, so it's a strong board across that whole segment there. And then we've also got a strong team that sort of sits under me. Most of my team have worked for me for sort of the last 8 to 10 years on multiple different projects. So we do all know each other. We know how the process works. We know how to get through the approvals processes, etc. And that's where the value gets created progressively as we go.
It's good overview of the team. Look, that was a really good introduction for anyone new to the story about Splinter Rock and OD6 Metals. Obviously, in my view, where the company's market capitalisation and enterprise value is at the moment, grossly undervalues the opportunity, particularly in relation to benchmark against some of the Brazilian stories that you mentioned. I think it is an outstanding sort of value opportunity that is represented right now. And if you're right with the rare earths market perhaps bottoming out and showing some signs of life, particularly with that substantial uptick year on year up until 2035 of an 80% sort of increase in demand, it looks like a really good entry level for any incoming investor. I suppose I just ask you, what is the story, and I haven't ever asked you this before, what is the story behind the company's name? What does OD6 represent?
It originally comes from Odette. So Darren and a couple of other founders had another company called Marley, which is effectively Black Swan. And then Odette is effectively White Swan from the ballet. So that's where it originally comes from. And then the 6 is the company is with Darren's company. He looks at different ones, which is iron ore, diamonds, etc. And it was number 6, but it's also, when you look at the periodic table, it's the 6th row of the periodic table. So that's the story behind the name.
Very good. All right. Well, there's any sort of finishing comments, Brett?
No, look, it's one of those ones. I think Brazil's had a lot of hype put around it. I think there's some good reasons for some of the hype and some bad reasons as well. But if we can't make it work in Australia and away from what is a BRIC country effectively, so everyone's trying to westernise the process. Australia is a Western country and within that sort of American, European, etc. borders, whereas Brazil's obviously a little bit more out there sometimes. If we can't make it work in WA, then I don't think anyone else is going to make it work in Australia at least. So we've got the opportunity there. We think we can do it. We're hoping to see some continued government backing. We can see that they're backing Aluka and also Arafura at the moment, but we think our capital cost will be a factor lower than them by considerable amounts. So they really need to start looking at the project and getting on board with a clay-hosted project, which is probably better value and less of taxpayers' money being put at risk.
Well, let's bloody well make it work.
That's right.
Thanks, mate. Thank you for listening to the Corporate Storytime podcast. We're really trying to build our audience for the podcast and aim to deliver regular episodes of our chats with executives from some of the ASX's most interesting companies. If you enjoy the show, please share it with your friends, follow the podcast and give us a like wherever you download it. And if you have any feedback, please drop us a line at info@corporatestorytime.com. Thanks and all the best.